Hi, and welcome to the Market Alert for Friday, the 12th of November 2021. So crypto, gold and the dollar rally as stock shorts puke to 13-year lows. Let's just look at this in a bit more detail because it's actually quite interesting. So we just drill down into this article. It said, finally, we note that all of the most recent surge in stocks has been a giant short squeeze. Notice in the following chart that both gross longs and gross shorts have fallen as the market has ripped, and we can see this separation here, which is highlighted. In fact, I'll just zoom in for you. You can see that. And what the article then goes on to say is this, and it's fascinating. It says that, in fact, this plunge in gross shorts has pushed it back to its smallest short position since Jan 2009. The last 8 weeks have seen over 200,000 S&P short contracts liquidated. That's the most aggressive short squeeze since Feb 2011, after which the S&P fell over 6%, rebounded, and then plunged 17%. And then it finishes off with here. It says in the run-up, there we go. In the run-up to the prior trough in shorts, the S&P ripped 24% in 30 days after the Fed created TALF, Treasury unleashed TARP, and the Fed moved to ZERP. This time, the S&P surged 9.5%. That's in the recent squeeze that we're seeing in 25 days. After shorts hit that Jan 2009 trough, the S&P crashed 28% and traded down to its demonic 666 level. So yeah, an interesting article there to see that we've got this disconnect here in the gross long and short specs. So whether that's a precursor or not, but it's interesting that this happened in January 2009, the last time that it was seen, and the drop that actually followed. But only time will tell whether this is actually a precursor or not. Meanwhile, in other news, yesterday we had the UK growth GDP figures, didn't we, quarter on quarter, and that came out. UK growth slows as consumer spending weakens and supply issues hit recovery. And if we have a look here and just go back a day, you'll see the actual figures when they were released. We actually, when we came, I did actually mention, I said 1.5 thereabouts, and we came out at 1.3. But of course, it still allowed the stock market to move to the upside. Like I say, news for today. I should have a quick look. Nothing major. We've got 3 p.m. is when the news is released. And then we've got Williams speaking and Treasury currency report out at 5:10 after the markets have closed, apart from the US, of course. And yeah, let's have a look at the Dow. We'll start off with that, and we can see the weakness continuing over the last few days and trading down to the Fib retracements. We did trade to 50% on Wednesday. Thursday, the market continued to move lower after trying to move higher. So the 62, 78 areas are important for this. And if you have a look at the 30 minutes, you can see that prices just continue to move to the downside. Coming off this high here is 100 points, 200 points lower. And here's yesterday's low that the market's got to be careful of. If it goes through here, then we continue to move down to the 62% retracement, followed by 78 and 89 in the Dow there. In the German DAX, well, different picture. The DAX has managed to trade sideways and hold. We've got a bit of demand here as well, but struggling. If the Dow moves lower today, we're certainly going to move to the downside on the Dow. So I would be inclined to actually draw in some fibs on the downside there. And again, if you move this into a 30-minute chart, you'll find it a lot easier to read. I'm not going to do that today. So yeah, there's potential downside targets. Unless something comes out and moves the market higher, then that's what we're going to be seeing. In the 30-minute chart, you can see yesterday we had that move to the upside again, bit of a pullback to the 200 MA in the 30-minute chart. And then price is just trading sideways. Very, very quiet afternoon, which we'll look at now in the 2-minute. So yesterday morning, the market started off moving towards the upside. The futures market moved higher, pulled back, and then as soon as prices sat on this BRN here at 16,050, the market rallied, was hit by selling pressure, then retraced down to the 200 MA, which we can see here. I got demand there as well. Straight reversal off this, and they managed to bring the market back, and it just spiking up here. Just a quick zoom to the upside, whatever that was. We've got selling pressure coming in. You can see massive selling. This volume in this bar is nearly twice as much as the previous bar, and then we've got further potential weakness, and the market traded sideways and then drifted, and then in the afternoon it was just wow, a very tiny range that we can see there, about 12-15 points, so not a lot happening there. Overnight prices as we move forward here moved slightly higher, as we can see there, taking out the previous day's high, Thursday's high, and then has traded down to the 200 MA and is now sitting at yesterday's close and 16,100, but looking weakish at the moment. It'll be interesting to see what the futures market does when it opens. In the metals market, well, incredible. They're allowing silver to move to the upside still. Can't believe this. We've got to take out this 200 bar moving average. This hasn't been breached if we go back for some time. Last time it was breached was in March 21, earlier this year. Managed to trade up to the high here, which is 28, just over 28.50, and then the market had a massive shakeout, but now we're starting to move back to the upside. This 200 needs to be taken out, along with the high that we've got over to the left as well, which is going to be 26.70. Yeah, 76. I mean, 26.50. It's got to take out and go to 27 would be more ideal. But yeah, incredible. The market is currently holding to the upside, as is gold. This is traded up to 78% from this high to this low. It needs to break this if it's going to move higher. And you'll see silver is a bit stronger than gold at the moment, as the gold-silver ratio is also moving to the downside. When it moves down, we know that silver is outperforming percentage-wise that of gold. The dollar's interesting. This is gapped higher this morning, and now it's starting to move to the downside as well. If we look inside of this, you can see that it was gapped higher. We've got some selling pressure in there as it did this, and now prices are back to yesterday's high. A break below this would be ideal to support both gold and silver. Back to silver. This is the 30-minute chart, as you can see, and prices trying to get through yesterday's high, which will be required. I'd be happy if it stays above $25 personally. Again, yesterday you can see the bankers moving it lower before the futures market move it back to the upside there. So there we go. That's a quick roundup of everything that's happening. Like I say, there's a couple of interesting things. That's the price of silver, and also at the moment what we're seeing in the DAX in the daily chart as well. This is screaming a retracement for today if the Dow continues to also head towards the downside, which we're actually seeing at the moment. A quick look at the 2-minute chart shows you the Dow moving back to the downside quite strongly as well at the moment. Okay, that's it for this one. As ever, thanks for watching. Have a great weekend, and I will see you in the next one.